The healthcare and materials sectors are two of the worst performing sectors on the S&P 500 in 2024. Our next guest says now, though, is the perfect time to take a look at what to expect from them in 2025. Thomas Hayes, Great Hill Capital Chairman and Managing Member, joins us now. Happy holidays to you. Thanks so much for hopping on Yahoo Finance with us. So you're banking on a bounce back here potentially with these two sectors. Why is that?
Yeah, Brad, thank you for having me. I think the theme for 2025 is going to be the last shall be first. If you look at healthcare, it's up basically 3-4% year to date relative to the S&P, some 25%. And with materials up 1.8% year to date, very anemic returns. But when the calendar turns, something is going to change, and that's called earnings growth. As a matter of fact, healthcare and materials are in the top 4 earnings growth expected for 2025. Healthcare is expected to grow earnings 20.6%. Materials is going to grow earnings 17.4%, which exceeds the S&P 500 at 14%. And, you know, Brad, if we look at healthcare, there's some strange things happening, but kind of predictable. We saw a similar situation in 2016, right after Donald Trump was elected. Healthcare and biotech sold off. If you remember, he was going to tear up the Affordable Care Act and the market got nervous. Shortly after the inauguration, healthcare rallied, biotech rallied. As a matter of fact, healthcare was up around 40% in 2017. Biotech around 75% after selling off after the election and then rallying after the inauguration. I think now it's not the Affordable Care Act, it's RFK Jr.'s got people a little bit on edge. And I think it's a case of sell the rumor, buy the news. It won't be quite as bad as people are expecting on the healthcare front.
What about the materials, Thomas? Good to see you as always. Aren't tariffs going to be bad for this sector?
Yeah, I think it's more than advertised. I think this is a negotiating tactic. If you look at materials, it has the lowest relative performance to the S&P 500 since 2020, and then going all the way back to 2001. These were both generational buy opportunities in the materials sector. And speaking of which, Brian, the materials sector, if you look at XLB, did the exact same thing in 2016. Remember, he ran as the tariff king. They sold off after the election. They rallied in 2017 after the inauguration. So we expect more of the same thing as it relates to just some of the technical stuff on this. You know, materials, only 7% of the components are trading above their 50-day exponential moving average. Now, I'm not a big technician by any stretch of the imagination, but that tells you the sector is completely washed out. And there's one player that we particularly like called Albemarle. It's one of the largest lithium producers. And if you know anything about lithium, it's very cyclical. Right now, it's at very low prices on the fears of a supply glut. We do expect this imbalance to be rectified by the end of 2025. Albemarle is one of the biggest players. They've got $3.4 billion of liquidity to wait it out while the smaller players will be crushed. So we do think Albemarle is going to be a great play. It's also down on the fear of softer, maybe potential or perceived softer demand for EVs in the developed world, like United States, like Europe. However, the EV game is all about China, and that's an unnatural government subsidized market, and that's expected to grow from 40 million stock globally, 41 million stock of EVs globally right now, to 132 million by 2027, largely driven by China and the government subsidies to push that. So that's going to help Albemarle. And even prior to that, you saw Albemarle could perform through all kinds of lithium prices, high prices, low prices, et cetera.
Certainly.
And this time will be no different.
Tom, I got to hustle to bar finish here, but just lastly, according to an SEC filing, Warren Buffett's Berkshire bought $28.5 million in Verisign stock, an internet registry company that's been around since the dot-com boom. You know, Buffett's moves lately, he's sitting on a lot of dry powder. What do you make of that? And how could it be deployed potentially? Where are the top areas he could deploy that in 2025?
So VeriSign is certainly a headline. It's 91 basis points of the entire portfolio. So you can see a lot of these moves are being made by the lieutenants, Todd and Ted. Buffett's got, some $350 billion of cash. I think right now it's about preserving his legacy, going out like Seinfeld at the top of his game versus eking out a few extra percentage points of returns. He's got the greatest investor of all time, in my view. I think he's been cautious. I think there's a Buffett premium on the basis of sometime after he passes, perhaps the sum of the parts is greater than the whole. But Buffett never wanted the company broken up. So that's going to take many years, if ever, to break up. You're going to have to roll off a lot of the current board members before you see that type of makeup, or before you see a material dividend, which is something else people would talk about. So I think right now it's preservation, it's a victory lap. And it's going to effectively, it's the law of large numbers. It's going to effectively trade like an S&P index prospectively, unless they can really hunt down an elephant before his passing and buy a very large, high growth business at a reasonable price, which is not looking like a high probability event in the coming years.
Thomas Hayes, always appreciate the insights. Happy holidays. Talk to you soon.
Thank you. Thanks for having me, Brian and Brad.
All right, all your market